There's always a new buzzword making the rounds on Wall Street, and the latest one is asset tokenization. From BlackRock to Goldman Sachs, it feels like everybody is rushing to get a piece of what they're calling the next massive evolution in finance. So let's dive in and figure out what all the hype is about.
So why all the excitement? Well, when the big financial analysts look into their crystal balls, this is the number they see. $16 trillion. That's what they think this market could be worth by 2030. We're not just talking about a new product here, we're talking about a fundamental rewiring of how we own and trade pretty much everything in the real world. And to put that into perspective, think about this. We all hear about AI every single day, right? It's everywhere. But you've got financial insiders, people deep in the industry, saying that tokenization might actually be a bigger, more foundational shift. It's not just a cool new app, it's a change to the very plumbing of the financial world.
Okay, so why is this massive change even necessary? I mean, what's broken? To get that, we have to look at the problems that are baked into our current system for trading real-world things. From gold bars to diamonds to coffee beans.
Just imagine you decide to buy a bar of gold. In our digital world, we expect things to be instant, right? A click of a button. But in the old-school commodity markets, the final settlement, that's the point where the gold is officially yours and the money has fully moved, can take weeks. That is a huge amount of time where your money is just tied up and risk is still on the table.
And when you put the two systems side by side, the difference is it's night and day. The old way is painfully slow, it's clogged up with all these middlemen who each take a cut, which makes it really hard to see the true price of something. Plus, it's super exclusive. The new way that tokenization promises, it's the complete opposite. Instant, direct, totally transparent, and open to pretty much anyone, anywhere in the world.
So, how do we fix these ancient problems? Well, that's where tokenization comes in. The whole idea is to take the speed and the efficiency that we're used to in the digital world and apply it to the physical one. So, how does this actually work?
So, what is it really? In its simplest terms, you're creating a digital twin of a real-world asset. This digital twin is a unique token that lives on a blockchain, which is just a super secure, unchangeable digital record book. And that token acts as a legally recognized proof that you own the real thing. Think of it like a digital deed for your house or car, but for basically any asset you can imagine.
And listen, this isn't some fringe idea coming out of a garage somewhere. This quote is from the DTCC. These are the folks who run the biggest clearinghouse in the world. They settle literally trillions of dollars in trades every single month. They're the plumbing of the financial system. So when they say this is a long-term evolution, it means the very core of our financial system is gearing up for a massive upgrade.
Now, this didn't just happen overnight. The whole idea was first proven with stablecoins, which are basically tokenized dollars. That showed, hey, this works. You can represent real money on a blockchain. Then, in early 2024, you had this huge moment when BlackRock, the world's largest asset manager, launched its Bitcoin ETF. That was basically a giant green light for the rest of Wall Street, signaling that these kinds of assets were safe to engage with. And now, all that momentum is spilling over into physical goods.
Okay, all of this is still a little bit abstract, right? So let's make it real. Let's look at a case study. How do you take something as physical and unique as a diamond and turn it into a tradable digital token?
It's a pretty fascinating process, actually. So first, a real, certified diamond is sourced and sent to a licensed validator. Then, it's stored in a super high-security vault, and it's insured. After that, they create its digital twin, a unique digital token, or NFT, that has all of the diamond's official certificate data embedded right into it. Things like its cut, color, clarity, all of that. This token then gets listed on a marketplace. Now, the owner of that token can trade it instantly online, or they can actually show up and redeem it for the real physical diamond whenever they want.
Now, this is maybe the most crucial point to understand. This is not like the speculative NFTs we saw a few years ago. This token isn't just a link to a picture of a diamond. It's a legally enforceable ownership deed, and it's backed by a real, physical, and insured asset that's sitting in a vault. It has verifiable, real-world value.
So once this technology is in place, the potential just becomes enormous. We're not just talking about diamonds anymore. We're talking about fundamentally changing who can own what and how they own it. Let's look at the growth here, because this is where it gets a little crazy. The entire tokenized commodities market today is worth around $7 billion. But
But get this, there is just one upcoming project to tokenize copper that's valued at $5 billion. Just one project is about to almost double the entire market on its own. It's that kind of explosive scaling that helps you understand how analysts get from billions today to that projected 16 trillion by 2030.
And the variety of what's being tokenized is already staggering. I mean, we're seeing the obvious stuff, precious metals like gold, silver, and platinum. We're seeing rare gems like sapphires and diamonds. But here's the truly groundbreaking part. People are now tokenizing assets that haven't even been produced yet, like the rights to copper that's still buried in a mine. This unlocks capital for producers in a way that was just never possible before.
And that really brings us to the final big question. This technology lets us break down any valuable asset into these tiny, tradable digital pieces. We've seen it with art, we're seeing it with metals and gems. So as we look to the future, the real question isn't what can be tokenized, but what can't be. What part of our physical world is next to get its own digital twin?